What's up, tax savers? Doing some Q&A today. Got that new Instagram questions feature, so I threw it out, got a bunch of tax questions back, so just gonna roll through them. If you're not following me on Instagram, at Tyler McBroom, and if you're seeing this on Instagram, thank you for following me. So let's just roll through them right now. All right, so we got best bookkeeping software for sole proprietors. So I'm gonna go with what about 90% of our clients are on, and that is QuickBooks Online. There's a couple different products out there. Xero is now a competitor. You've got your QuickBooks Desktop version. I love QuickBooks Online for a couple reasons. Number one, there's an app you can download on your phone so you can always see how you're doing financially. So you can be sitting at the car wash and pull up your financials and see how you're making money. Versus a desktop, you got to be at the computer. Number two, the back and forth between your accountant, it's so much more efficient being able to just pull the books up and they're online. So I love QuickBooks Online, and like I said, about 90% of our clients use it. So next, giving stuff to Goodwill. How do I record the accurate deductible value? So on that, how that works is technically the way that you're supposed to do that is you're supposed to go into the Goodwill store, find something similar that's in similar condition, see what they're pricing it as, and that's what you write it off as. That's what you're supposed to do. Generally what happens is you kind of just take your best guess, but that's, you know, kind of what Goodwill could price it for and sell it for is what you get to deduct it for. If I purchase a car through the Montana loophole, can I also write it off for my daily business? Now, I don't know what the Montana loophole is. That's not something I'm familiar with, but I'll just kind of address auto deductions in general. So yes, you can write your vehicle off if you use it for business. How that works is you take your business only miles, divide it into your total miles, and that percentage is your business use percent, and you multiply all of your expenses by that. And you can follow me here. I'm gonna grab my sunglasses. It's a little less personal, but it's bright and hot out today. There we go, that's better. I'm getting reflections off the camera, so we're gonna keep rolling. All right, I'm planning to buy a new truck. You can see I'm in shorts and flip-flops. Sometimes you gotta go casual. Planning on buying a new truck for my business. Can I deduct it on my taxes? Yes, we just covered that. Same rules. Trucks, cars apply. The only difference is with the big truck over 6,000 pounds, you get to deduct the full value of it in the first year rather than writing it off over 5 years. Are there any tax benefits if I run a business out of my apartment? So that follows the home office deduction rules, which we've covered before, but basically you've got to have a 100% dedicated business use only portion of your house, and then that percentage of your utilities, mortgage interest, property taxes, or rent, that percentage of that business use only to the total square foot of the house is deductible as a home office. What details, information do you need to deduct mileage related from work? So I'm gonna assume that means work as an employee, not as a business owner, because we just covered that. And unfortunately, commuting miles actually aren't deductible. So if you're an employee of a business and driving to and from work, that's not deductible. Sorry. How do I find out quarterly estimates for my taxes? Well, you run numbers or you get them from your CPA. So usually what happens, I'll kind of walk you through how we do it, is when we prepare the tax return for this most previous year, so say in March, we did the 2017 tax return in March of 2018. Well, what happens is then assuming things are all equal for next year, we give you quarterly estimates that you should pay. And your accountant should do the same thing if they're preparing your return. And TurboTax probably does it too for you 1040 only people out there that are employees. And then then you just pay those, and then if things change significantly over the course of the year, so say halfway through the year your business is skyrocketed, then you want to make sure that you're updating that. So then at that point you'd reach back out. That's where tax planning is so important. You'd run updated year-to-date numbers and then guesstimate what you think the second half of the year is going to be, and then figure out what your tax liability is, and then update those estimates. I don't know nothing about taxes, but do you pay it monthly or annual? So I hope that after following me for a little bit, you'll know a good chunk about taxes because we're sharing all this stuff daily. As far as paying it, typically you pay quarterly estimates, kind of like we just covered. But if you pay it, if you're an employee, then you just have money withheld from your paycheck. S corporation or LLC with an S election, what's the difference in the pros and cons? Basically, from a tax point of view, the liability is a lawyer question. From a tax point of view, it's actually going to be the exact same thing. Can you write off a living room that you dedicated to a home office in a rental apartment? So the same rules apply. It's got to be 100% business use for you to write that off. So if it's your living room, unless you're straight hustling 100%, 34 hours a day, probably not going to be able to write off the living room portion. Notice I said 34 there, not 24. That was on purpose. How do distributions work for an S corporation? I actually just recently shot this one. I don't know if it'll roll before we film it, but so basically the S corporation is a pass-through entity, which means you pay tax on the net income of the business, whether you pull the money out or not. And so when you pull the money out as a distribution, there's no tax on that. You just pull it out, unless you took a big loan out in the company's name and then pulled that out, then you potentially might have to pay tax on that. But in general, if you earn $100,000 and pull out 80, there's no tax on that other than the tax you pay on the 100. Any tax tips for an 18-year-old? So on this, I'd say it's the same as everyone else, with the exception of if you're 18 and just getting a job for the first time, I would say set up your W-4 so that you don't get a big refund at the end of the year. Set it up so you break even or maybe owe a little bit. That way you have that money throughout the year and you're getting more cash take home every month, because a refund is essentially just an interest-free loan from the IRS. So that would be my number one tip when you're just getting a job for the first time. Boom, Q&A. Interact with me on Instagram. I love it, and hope you find some value and that you got some good Q&A, and we'll see you next time.